at the market maker's expected move for the day. Looks like they're pricing options correctly, if long as no one else is. 55 BPS up, broke above the top of the broadening wedge on the 15 minute, right there. It's in the yellow lines. Tested 56.26, failed, and might be falling back below that here into close a little bit. We'll see if that holds up through Monday. We do have a couple speeches from JPOW next week, Tuesday, Wednesday, at which point I think he couldn't possibly say anything bullish enough to support the current price of the market, but maybe he does. Did I accidentally just close the commodities thing? I might have. So commodities up a little bit today. We saw some of that in oil earlier. Precious metals up quite a lot. Silver, gold, copper moving up. Huh. Interesting. Big drop in yields with today's NFP data. Not so much with today's data as it was for the revisions to the prior 2 months data, which makes everything look a whole lot better. Correlation on the 1 month continued to nosedive and remains at all-time lows. However, 3 month correlation reversed today and started to move back up. So we're seeing, again, a breakdown in 3 month dispersion and an increase in 1 month dispersion, which is, a sign of how focused on near-term expirations a lot of this trading is. A little bit of a breakdown in the carry trade, but mostly alongside the drop in the dollar, which is ending the day here under 105 at about 104.86. As we get a little bit of uninversion in the yield curve, we're also seeing vol turn up. As more and more participants go long bonds, which is what you're going to see with the yield curve uninverting, more and more of them are going to have to protect that bond position, and they're going to do that by going long volatility, right? And so we are starting to see that slowly happen. Now, obviously, this could reverse. We could get another inversion in the yield curve with the Fed making it clear once again that they have no intention to cut rates, but for now, the market's going to run away with its own narrative. Move still up quite a bit, 102.82, but actually, that's probably up today too. And now moving a little bit more in line with correlation on the 3 month as bond volatility picks up. And we're also gonna see that reflected in the forward yields of volatility, not just the one we measure, but if we look at convexity on volatility out into the future, we should see that start to increase. Skew is still pulling back as of Wednesday. I don't think this is updated yet, but we've probably gotten an even further pullback in the amount of tail risk being bought. I think the put right index is at its highest level ever. So, that kind of tracks. The amount of the S&P over its 20-day moving average is still negligible. We're below 50% of the S&P trading above its 20-day moving average, and we're still not really picking up any breath despite the massive moves up in both ES and NQ. Overall, RSP down on the day, Russell down on the day, and Dow barely moving up. So we're still not seeing that. We did end this week finally with positive correlation between cash VIX and VIX futures. This is the first full week that has ended positive since November 6th of 2023. So that's kind of exciting. Last week, at the end of the week, we lost, like right into the end of the week, we lost that positive correlation. But this week we managed to hang on to it and are moving into next week more positively correlated. Or just not really correlated at all, I guess. Is it really a full week, though? Listen, it's the end of the week. It's a full week. So I've moved forward our target range for Fed fund futures pricing. Now we're looking out at January of 2025, for which the Fed fund futures market is pricing in currently a two full rate cuts. So that's what the bond market's expecting, is 2 full rate cuts by Jan. I think this is still ridiculous, but we'll see. That's about it for this week. We're gonna go into next week, I think, with not too much data in the front half of the week. I think Monday's pretty light. We have German balance of trade, some consumer inflation expectations which are expected to fall. And then we get the consumer credit change, which is expected to go up a shitload. Used car prices will also come in. Those are probably going to continue to still fall, which should ease inflation expectations. But then Tuesday, we have Powell's testimony before the Senate Banking Committee, I believe. We're going to get Chinese inflation that night, which could be a big deal, especially if it's staying above their target. Then we get a speech from Powell Wednesday, not much there. And then core, so we're going to get CPI next Thursday, PPI next Friday. So the back half of next week, probably far more important than the front half, but Powell could upset things, especially with how exuberantly priced everything is, if he sticks to the narrative that the Fed probably isn't going to cut this year, right? But we'll see how he lands on that. I know he's been far more dovish than some of the other Fed presidents, and as long as he supports the current narrative, we could continue to drive higher. Anyway, thank you guys so much for tuning in this week. I will see you all on Sunday for the member stream, and I hope everybody enjoys their weekend. Later, guys.